Hey, this is Kevin Hunter, your North Texas home hunter. And I also have Mr. Bryan Connatser.
Howdy, Cardinal Financial, mortgage lender extraordinaire, if I don't mind saying so.
And by extraordinary, he means someone who's been doing it for 30 years. So must have started as a teenager and a real subject matter expert. So we're doing our weekly market update. So if you haven't seen them, be sure to check our channels, our YouTube channels, subscribe, like, all that good stuff. We're going to talk about the week of December 12th, right? So technically it started yesterday on the 11th, but what we're seeing in Frisco, in obviously 75035, as you can see on the screen, and this is my neighborhood. This is my people, and the median list price is continuing to drop, right? So we're seeing it down to 597. It's been as high as the 700s as of a couple months ago. So we're seeing some of the sales in this zip code, which kind of goes over to, I think, Preston and over to Custer, which is where McKinney starts. And we're seeing some of the prices of the homes really begin to drop, right? And I think that's just based on the inventory, and that's based on what homes are actually going on the market. I know we've got $1 million home, a luxury home in my actual neighborhood that should be picking this median list price up. It should close probably this week or maybe next. So you've seen that drop. The square footage obviously is kind of ticking up a little bit. Average days on market, we're seeing 73, right? So we're seeing some homes that have been on a market for quite a while. The one I just referenced that's actually in my neighborhood has been on market for 8 days, right? So it really is about the property that you're in, the house that you're selling. The luxury homes are going in less than 2 weeks, right? They're usually 8, 9, 10 days, right? And that's just a really nice house. It's got a pool and a kitchen. So the right properties are really kind of speaking to the right audience, to have people come in, view the home. It was on market probably 4 days before it went under contract. So
Wow,
the right properties are getting the right days on market. Price increase, we're seeing it kind of go up a little bit, right? So we're starting to, I think, and Bryan will speak to this more than me because that's his job. But in the real estate world, seeing the prices go up 5% is we're starting to, hear about some of the interest rates that are going to be dropping. And obviously we're going to start to see some of the pent-up demand really starting to get into some bidding wars and some multiple offers. And so I think we're starting to see some of that with some price increases. Inventory is we're at 80, which is pretty normal. We're having some new builds, some new construction right in this area. Some really nice homes are starting to open up. So that's really gonna put a big punch in the inventories. We'll see that rise as some of these houses are going into market. So for the week of December 11th, today's December 12th, in the zip code is 75035. It's my hood. That's your market update. So with that, I'll kick it over to Bryan and let him kind of share some of the financial kind of money matters type updates on his end.
and we got some really exciting news. I also want to share my screen real quick because I've got two things that I want to show you. I want to show you what is happening in the market, and I'm going to show you what the results of what is happening in the market and what it's creating. So, okay, so here's my market watch, and this is what we watch to know where our rates are going. This is the mortgage-backed securities market. A lot of people also watch the treasury, the yield on the 10-year treasury, and they move very closely together. But since October the 26th, you can see mostly green. And when you say, to talk about what happens in the mortgage-backed securities market, is when the prices of the mortgage-backed securities are improving, that means demand is stronger and the yields on those bonds drop, meaning interest rates drop because the interest rates follow the yield. So what we really want to see, what mortgage loan officers want to see, and what their clients want to see is more green than red. And you can see we have been continually moving, obviously not in a straight direction, a straight line, but we've been moving in the right direction since the end of October. Last couple of days have been kind of plateaued, but they haven't lost a lot of ground at all. So what you're seing is we now had 5 consecutive weeks of really good news in the mortgage-backed securities market, and rates have continued to fall week over week. Let me stop sharing this one because I want to show you a different screen, because the rates improving are causing this. Look at this. Purchase applications rose 35% week over week. This was published at the end of the, yeah, I know. People are starting to feel just a little bit of momentum. And when they're starting to feel a little bit of momentum, a little bit of good news in the market, it's actually breathing fresh air back into that home buying market. And I can tell you, I've got the data. I track everything that we do. So I've had more loan applications since Thanksgiving than I did in all of October and up to Thanksgiving. So basically the first, in 7 weeks, I had fewer applications than I now have in right at 3 weeks. And it's because what's happening is you're seeing the rates drop week over week. So purchase applications are up. They're still down year over year from last year, but the fact that we're getting that positive movement, that's going to create more, I would say, stress on the listings that are out there. And you mentioned potentially seeing more multiple offer situations. I got a contract right at the end of last week of a past client who was working with one of my realtor partners, and they were buying in the mid cities. And they went to go look at the house, and next thing you know, I'm getting a call saying, do they have the money to over listing? And because we're probably going to have to go at least 10,000 over and pay their own title policy, because they are already 2 offers in on the property, and that they want it. They went 10,000 over. They paid their own title policy. But the bottom line is that, that's already happening because of that 35% increase. And I would say it's been week over week over week. We've actually seen that momentum over the last 3 weeks. Additionally, this is an article that came out mid last week. Is like the impatient home buyers are gradually accepting the reality of the housing market. So the fact that rates are higher than they have been in quite some time, it's kind of starting to settle in that might be the new norm. Although we do believe rates will continue to fall. But the bottom line is people are all basically they're done waiting to buy, right? They're like, okay, well, you know what? We need more room. I met with a gentleman, client yesterday for coffee, and he's got him and his wife and 3 kids, and they're in a 2,000 square foot home, and they can make it work. And yet he's now thinking, I don't think rates are going to come down a lot, and we've got a lot of equity in our home. I'm thinking now might be the best time. Like the longer we wait just might be causing the house prices to be more expensive, and I think rates will still be elevated. And while I agree with him on the houses will still be becoming more expensive, I do believe rates will kind of come down some in the near future. But in my lifetime, my wife and I have been married 34 years. We bought 10 houses, and I've refinanced every single one of them except for the house that we bought back at the end of February of this year. And I plan to refinance that when rates get down. So I would say don't let the rates where they're currently at, because historically they're still not high and they're on the way down, as I showed you on the MBS market. But go get that house. Marry the house, date the rate, right? Because I can show you how a house purchased this year at a higher rate, but refinanced next year at the lower rate will cost you less than waiting till next year when the rates are lower, because the house will be more expensive and there's no way of getting around the fact that you'll owe more money, right? So to your point, we are starting to see that pendulum swing to where the prices are starting to rise again. There's more buyers in the market. Nearly every home is being, listed and, getting quicker action than what they did just 2 months ago. So that's kind of what's happening and what we see. And we truly believe that there's more good news to come in the rate market. But at the same time, there's no reason to not go buy right now, because you can always refinance out of that loan like I have.
Well, and it's really kind of easy math, right? And that's why I've enjoyed some of the discussions you and I've had. Like, hey, look, I got this calculator. I can kind of walk people through it. We can get all the X factors wrapped in there, all little nuances of an actual purchase or a sell, and getting that loan, right? So, so the rates are a certain amount. So people who are sitting around waiting for those rates to continue to drop, Okay, well now you're in a competitive real estate market, right? Where the prices of the houses are going up, and if you get multiple offers and you're getting a bid, well then it's going up exponentially, right?
Yeah,
So
absolutely.
it's really important to talk to someone like yourself, someone who has 30 years of a window to say, hey, look, I've been doing this for long enough to know here's the kind of the ebb and flow of the market. Here's where I think it's going to go, and for that opinion to actually matter.
Yeah.
So to be able to have that discussion, and whether it allows a purchase to happen or a sell to happen or not, at least having all the information, right? At least if I'm a home buyer, I want to sit down and talk with you, and I at least want to have that conversation. So I'm as educated as I can possibly be, right? Because nobody has a crystal ball. Nobody can forecast, oh yeah, it's actually going to be this, right? So you're just making an educated guess. And for a purchase like this, you want to have all the data you can have. You want to walk through all of the different exercises and options and potentials that could potentially happen, right? So being able to sit down and have a conversation with a lender and say, hey, look, I know you're not going to pressure me into it, right? Because you're not a high pressure guy, but help me understand all the nuances that go into this buying decision, and make sure that I'm informed so I can do the best thing for me, right? Not the best thing for Brian or Cardinal, not the best thing for Kevin or HRG, but the best thing for me, the client, right? Because that's your focus. That's my focus. We want to make sure they have all that information. So
Knowledge
now's
is
the time
power.
things get interesting.
Yeah, knowledge is power.
Absolutely.
So to go along with what's happening in the market, last week, the FHFA, which is the agency that manages Fannie Mae and Freddie Mac, they changed the single family conforming loan limits. So now it's $762,500. You can buy roughly an $805,000 house and only put down 5% now. And I think that's amazingly huge. It's even mind-boggling to me. But it actually played out perfectly for a client that we got a contract on Saturday. They have the ability to put 10% down, but the house that they were wanting had been listed by a small builder out in the Rockwall area for quite some time. And the realtor called them and said, hey, listen, I think I can get them to 855. Okay. So Daniel called me and said, if he gets them to 855, what does that do for us? Well, I did the calculations on it, and guess what? 10% down, that gets us underneath the maximum conforming loan limit. And guess what? We're off and running. They got the contract written, and lo and behold, and at that particular point in time, that builder was ready to help a lot. He gave them $24,000 to go towards a 2-1 buy down. So they're getting to start instead of at 7.5% interest, which is what their rate would have been in that market based upon credit scores and down payment. They're starting at 5.5% for the next 12 months. We're by the way, we're closing on the 26th of December because we can close in 2 weeks. We can close it fast.
Wow.
So
Merry Christmas.
yes, exactly. So they're getting 5.5% for the first year, 6.5% for that second year, and then it would graduate to 7.5% if it waits that long. But we really believe rates are going to get back down into that area, maybe even into the 5.5% range before he ever gets to the 7.5%. And so what will happen is we'll take that loan, we'll just automatically refinance it into that lower rate for the longer term, but yet they got that lower rate for at least the first 12 months. If I'm remembering the numbers, forgive me, I want to check real quick. I want to tell you how much it saved them. I got it right here.
Yeah, and while you're looking that up, it's funny because every time I talk to you, I feel like I'm more knowledgeable about the lending industry, but also, and this is even more important, I feel like I'm less knowledgeable, right? Because I'm like, because I share with you, hey, this is what I'm seeing, this is what I think, and you're like, well, that's true, and it's always that but, and I'm
There's
like,
if then.
okay, that's why you're the expert on the finance side, and that's why I stick to real estate, because as soon as I think I know something, you always say, hey, well, this just happened, so you probably don't know this yet. And I'm like, yep, no, of course I don't. That's your world. So yeah, share with us your numbers.
But like you're talking about, that knowledge is power. I mean, it's important that we talk about it, and that people that are watching this, that they understand what is available to them. What tools do they have to help them make that next move? So that 2-1 buy down is saving them $955.13 a month for the first 12 months over what it would be at today's current interest rates. And the second year it will still be $487.99 a month over today's current. And the bottom line is their realtor, it was their negotiating benefactor, was their shark on their behalf, and got a good price on the home, got some help from the builder to help them be more comfortable buying a house. It was probably a little bit higher than they wanted it to be, but they can afford it. They have no problem affording it. But many times the mortgage industry can qualify someone for more than they would probably be comfortable having in their monthly budget. And that's kind of what was happening for Daniel and his wife. So it really, really helped out. It all came together. And the fact that we were able to get it closed, we could actually do it just before Christmas, but it worked better for the builder and for the clients to do it on that Tuesday after Christmas. But we'll still get them in there before the first of the year. They'll get to spend the new year in the new house. Another change that took place in the mortgage industry, and it became effective immediately, is you now, if someone has a duplex or a triplex or a fourplex that they're interested in and they want to buy it, live in one of the units, and then rent out the other 1, 2, or 3 units, we can now do that on a conventional loan with only 5% down. And if you're buying a multiple unit home, that actually means that the maximum loan amount can go over $1 million and you're still putting down 5%. I mean, think about that. You buy a quadplex, you live in it, the other 3 sides are rented out, so it's more than paying the mortgage, and you only have to pay 5% to get into that thing. And the rules state you only have to live in that as your primary residence for 12 months, and then you can lease out that 4th unit and go buy yourself another house as a primary residence, right?
Yeah.
That is a way to build wealth.
Yeah, and that's what really interested me into and leaving kind of the corporate world and getting into real estate was just the multiple avenues and vehicles in which you can kind of not only be smarter with your own kind of residence, your own kind of residential property, but really start leveraging a market that is bigger than the S&P 500, that is a little bit more predictable in its steady growth, consistent growth in real estate, right? So these kind of different properties, whether it's you can invest in a multifamily, you can invest in other rental properties, right? There are other things you can do that it almost feels like this kind of secret network of people who know about this, right? And are using their money to make money so that kind of the backside of their life, they're able to not only have a better life for themselves, but really kind of provide for their family as well.
Absolutely. That is buying a primary residence, whether it's a single family residence or a quadplex, that is the start to the best builder of generational wealth that you can possibly have. That you can saving money and investing is an important piece to have. It's another pillar on which to build your future. But real estate, especially starting out with that primary residence, because of the tax deduction for the interest that you pay on the loan and for the property taxes you pay on your primary residence, that puts money back in your pocket when you file your tax returns every year. And you don't get that by buying and selling stocks. You actually pay capital gains on it, right? But so I want to talk to you about, have you ever heard how an interest rate is calculated for every individual client?
No, I haven't.
Okay, so the reason this come up is it came up with Daniel over the weekend. And he was saying, well, hey, I see the market is saying it's out there like 7.0 something. Okay, well, that the published rates that you see in the news are with all of the possibly best criteria that any rate quote could possibly be built with. And the flip side of that is every rate quote is actually custom made for that individual client. Your rate quotes are built based upon credit score, based upon percentage of down payment or the lack thereof, and then also the loan size. It gets calculated into as well. Sometimes on FHA, loan size doesn't come into play at all, and neither does down payment, but the FICO score, the credit score, is the main driver of the interest rate offering. That's the same with VA as well, because on VA, they require 0 down payment loans for our veterans that qualify for a VA loan, but the credit score is the single determining factor on the rate quote for them. But so I'm talking to Daniel, they've got good credit, but it's 726, okay? Earlier in the year, I believe it was in May, the FHFA and Fannie Mae and Freddie Mac came out with a new LLPA scale, which is called a loan level pricing adjuster scale. Prior to May, the top credit score you needed to get the best rate possible was 740. Okay. Now they've got a tier between 740 and 760, and another tier between 760 and 780. And then that top tier is anything over 780. What that means is if you've got an 800 credit score, you could be offered the best rates available. If you've got a 765, you're not going to get as good of a rate offering as somebody with an 800. If you're at a 726, like our clients are, there were a couple of bumps to the actual loan level pricing adjusters to the rate that was offered to them because of just having a credit score of 726. So that is something that home buyers need to know, is that rates are not the same for everyone. And it's now, if you don't have basically perfect credit, your rate offering is probably going to be slightly different or slightly adjusted, comparatively speaking, to someone who does have perfect credit.
Awesome. Well, so that's today's market update from your Money Matter specialist, Kevin Hunter with Hunter Realty Group, and Bryan Connatser with Cardinal Financial. Thanks for tuning in. Make sure you subscribe and like, and we'll talk to you soon.
Have a great day. Ask us any questions you got.